and welcome to grant accounting for conditional and restricted grants. In a previous video, we talked about how you take a grant and you classify it into one of the four grants that are out there. And this would include, as shown on this list on the right, unconditional and restricted, unconditional and unrestricted, conditional and restricted, conditional and unrestricted. In this video, we're focused on conditional and restricted. Let's dive into conditional and restricted accounting. What are the rules of engagement? Rules of engagement say that if it's conditional, you only recognize revenue when the condition is met. And on top of that, you recognize it immediately when grant conditions are met. It doesn't talk about restrictions, it just talks about conditions. And that's true whether or not the funds are received. So let's look at an example of what a budget might look like. You lay a budget out and it has grants, which we haven't populated yet. And then you have admin of $10 a month, and you have fundraising of $10 a month, programs of $10 a month, totaling $100 a month. And you're going to do this for 12 months, January, February, March, April, May, etc. And the dots denote June, July, August, September, October, November, and December. And that totals to $1,200 for the year. So you begin your campaign to go out there and raise funds. So what are the accounting entries associated with these conditional and restricted grants? Well, you receive in January a conditional grant with restrictions. And it says they'll give you $1,200, but there's no check with this. Now think about that and say, what's the condition? The condition might be that you need to serve 600 meals in a month. And when you meet that condition of having served 600 meals in a month, the grant condition is met. However, there's a restriction. When you've met that condition, these monies can only be used for actual, let's say, food content. It can't be used for labor or space rental or adjunct items. It's only for direct food products. If you look at those two things, the conditional aspect is the 600 meals. The restriction is that the money can only be used for food products. So the rules say, if conditional, recognize revenue only when conditions are met, and restrictions are not a limitation. And the question is, how do we track this grant? Some track it on spreadsheets, others track it on other custom systems, and you can also track it on a paper system offline. Another alternative is to track it within the accounting system. This way, it's visible to management at all times, and the probability of forgetting about it is remote. However, it requires some special handling. Once the conditions are met, an entry might look something like this. You debit a deferred receivable for the $1,200, and you credit revenue restricted for $1,200. Well, is it really a deferred receivable? And keep in mind, this is even if the restrictions are not met. So now looking at this, we say, well, is it really a deferred receivable? Well, you've met the conditions. Therefore, technically, it is a receivable, but it's not a receivable just yet. It's only a receivable in this situation because the grant documents might say you can bill me when you have direct food expenses of that amount or components of that amount. And so potentially it could be a deferred receivable, but if you have other ideas, you could do something similar. The other entry, credit revenue restricted, it really puts it on the revenue line. I mean, it sounds great. It's good for viewing and for management reporting, but imagine at the end of the year, if this transaction hasn't cleaned itself out or cleared itself out because the restrictions haven't been met. What happens is that item becomes part of the closing entry and ends up in net assets. Now, when the new year opens up, that revenue restricted vanishes. So you need to process an entry to bring it back from that net assets into revenue restricted, recognizing that this was an entry that's conditional and restricted, which met the conditions, however, had not met the restriction. So let's go back to the model where we're having the whole transaction take place in the current year, so we don't have a crossover from one accounting year to another. When the restrictions are met, these two blocks of entries are made, and that is to debit accounts receivable for the total amount that's due, the 1,200 in this case, and to clear the deferred receivable of that 1,200. At the same time, we need to clear the revenue restricted out to revenue. And when you do those two entries, your accounting is pretty much on track, and you only need to go ahead and process one more transaction when the payment is received, recognizing the payment received by debiting bank and crediting accounts receivable. So when you look at all these transactions together, you can see that it enables management to see real time in statement of activity and statement of position what might be outstanding so we don't drop the ball. However, accounting needs to stay on top of the ball if it crosses a reporting year and the books are closed, that we need to bring back the revenue restricted in the new year if we want to track it the same way. So that's a nuance of how you could track it. Now, there are variations of this that you could implement, but if you follow the basic spirit of what we're doing here, you should be fine. So, looking at the total chart again, in this series of videos, we talked about how you categorize grants into one of the four buckets. In this video, we looked at how you address conditional restricted. In other videos, we talked about each of the other three. And the suite of 5 videos explains how you handle grant accounting at a high level. Now, for more detail, if you have specific questions and you want to lay it out, we'd be happy to address that. Now, in terms of closing comments, we recommend that you track this in the accounting system. You have the processes and the structures in place so that management and the finance team can see in real time what's outstanding, what grants are in the pipeline, what's being recognized, what needs to be recognized. It just needs a little more attention at year end if there are crossovers to make sure that the carryovers are properly addressed. I hope this video was helpful. And if you have questions or comments on videos we should make, please go ahead and comment below. We'd love to hear your feedback. Thank you so much for watching.